Hey traders, welcome to week 45 review. Been a bit of a funny week this week. The SPY has had, well, if you were to believe the financial media, we're heading into a bear market, doom and gloom, the AI bubble has burst. Well, let's see what actually happened. SPY, 2 up days, 1 middling day, bit of a drop to test the 50-week moving average, and a nice green day on Friday. We've just returned to pretty much where we were end of October. All completely healthy for markets. They breathe in and out. Expect, average 3 green days for every 2 red days. If we didn't have red days, we wouldn't be getting the volatility we need to sell cash secured puts, which was where we make our money. I was reading the Wall Street Journal last week. It's just the usual narrative designed to get clicks. Clickbait, that's what they call it. But to me, perfectly healthy behaviour. We've tested the 50-day moving average twice, bounced off it twice. I believe it's all to do with the recent government shutdown in the US, all of that good stuff, some other bits and bobs floating around in the news. Nothing I am worried about. Look, let's go back to April with the tariffs news. That drop, right? And that didn't really worry us very much at the time. So this teeny weeny red candle here, I am not bothered about. We'll see what happens on Monday. We'll see if this 50-day moving average holds, or if we're going to have a little check of the 100-day. It's nothing we're over concerned about. Good market for selling cash secure puts, up and to the right with a bit of volatility. Perfect, exactly what we want. What was the VIX doing? It wasn't huge, I don't think. We saw up into the 20s. It's the 30s before I stopped trading. So nothing I'm going to be taking any real action about. This is the sweet spot for volatility for cash secured puts. So, what happened with the portfolio over the week? PCG, good solid utilities company. So if you remember, I sold the 1550 strike on this one down here, which was an excellent point for, previously resistance, then support, and since then it's been on a nice little upshoot, broadly following the 20-day moving average. The moving averages are still a little bit inverted, and we're starting to sort themselves out. If we can get the 1500 in the right order, we'll be doing good. But so I sold the 1550 strike on the 28th of October for 33 cents a share. And I bought it back on the 10th. Where are we here? This green candle here, for 16. So as you know, I put a 50% take profit on all my trades, if I can get that before halfway point in time, in terms of days of expiry. So I did in this one. I took a profit of 17 cents per share in 13 days. Which is about, 1.1-ish percent, 1.13% return on investment in 13 days. Annualize that up, what we're looking at, 30-ish percent, 30.1. Beautiful trade, exactly what we're looking for. So behaved well, that one did. So thank you, PCG. SoFi. If you remember, I sold the 27 strike up here for SoFi back on the 4th of November. Where are we? 4th here on this green candle. And then immediately we had a lovely big red candle. If you remember, you want to go check out that video. I sold that on the basis that SoFi is on an absolute tear at the moment, and it is hugely reactive to the 20-day moving average, as you can see here, with brief tests of the 50-day. So I sold this here thinking, the 27 is way below two of the moving averages, the 20 and the 50. Should anything happen, we've got two support levels there. In theory, of course, it's all only theory, my own opinions. And sure enough, massive red candle on the Thursday, touched the 50-day, opened lower the next day, and finished above the 50 for a quick recovery. And I was out of that trade in 7 days. Bought it back on the 11th, which is this candle here. Quite luckily, looking at the next few days. What did I get for that? So I sold the original 27 for 57 cents a share, bought it back on the 11th for 28 cents a share, giving me a profit of 29 cents per share in 7 days, which is pretty much bang on, teeny bit more than 1% return on investment in 7 days, which nice easy calc, which is 52% annualized. Fantastic trade. Thank you, SoFi. So on the very same day, I immediately sold another 2 cash secure puts, a bit lower at the 25 level strike to get me touching the 100-day moving average. So now we've got 1, 2, 3 potential support places before we go in the money. As you remember, I go for 2% with every trade I make, so it just so happened quite nicely that the 25 level worked out at actually just over 2%. I sold that for 54 cents per share, expiring on the 12th of December. So just over 2% if the trade runs the full 30 days. And sure enough, I actually probably could have got at it the next day for a nice ROI profit, but I didn't, and then we got slammed with another red candle and a slight recovery on Friday. We'll see what happens on Monday, but not overly worried about SoFi at the moment. We're certainly not overbought. The MACD bands don't really know what they're doing at the moment, flipping here and there and everywhere, but I think SoFi's just being caught up with the general malaise over government shutdown and whatnot. So that's what we did with SoFi. One good trade and back into it again. AL, American Airlines. So technically, this looks like a really good setup to me. When I did jump into this, so when did I jump in? I think it was the 12th, was it? Let me get into that now. No. When did we get into that? Let's have a look. American Airlines. It's a bit of a spoiler here, but yeah, on the 11th, we got into that one. On the 11th. So here, on this red candle. So my thinking with this one was good earnings. Jumped up, looked like we've made a home at this point. We weren't at recent highs. We were above what's probably the new support area from before earnings, and I could get a strike for 2% below not only all of that, but also all 3, 4 moving averages, and an area that, if you go back, has clearly been both resistance and the support as well. So felt pretty good about the technical setup. Could get my 2%, so that's fine. I jumped in. Sold cash secured puts for the 12th of December for 29 cents per share at the 12 strike level, so above 2%. So it would have been about, I was going to test the brain here, that would have been 2.4% return on investment over 30 days. All well and good. However, I've been dabbling with fundamental analysis as well as technical analysis, because the worst case scenario for a wheel trader is you end up getting assigned on a stock that goes bankrupt. And you can't do the cover call side on it because there's nothing to do the cover call side on it, so you just effectively lose the difference between your cost basis and zero. So technical analysis has been serving me really well for the last couple of years, but I'm starting to look deeper into the candidates I'm taking on here and understand the companies a bit better. So I performed a discount cash flow analysis on AAL using a pretty conservative weighted average cost of capital was about 10%, and assuming a pretty conservative terminal growth of 2.5%. I ran a bear, base and bull case scenario for a fair valuation, and I was absolutely horrified to find out that a $12 stock price is not even remotely justifiable for American Airlines. I put a fair value of negative 23. The reason for that is that American Airlines is carrying a astronomical level of debt. So when you take into account the debt, the assets the company has, and you project that along those lines that I just discussed, in the absolute bull case scenario where American Airlines turns their business around at all levels, and I'm being generous, the best I could come up with was a negative $6.17 share value. Even with future earning potential, everything, American Airlines is, in my very humble and very novice opinion, very close to bankruptcy or a buyout or something crazy like that. It is a profitable company, but it's paper thin. It's profitability. I mean, you get a shoot up in oil price or a slowdown in customers taking flights, you are very shaky ground. So this is one of the worst case scenarios for a wheel trader. It's why I don't put any more than 10% of my overall account in any one stock. But this one, this trade will probably go fine. American Airlines will be good for the next couple of years. But at some point, it's going to explode and something massive is going to happen. It'll either bailout or someone will buy it over, or it'll just go bankrupt because its debt to equity ratio is insane. So it's trading on hope, I think. On hope that it can be turned around, or it gets this new fleet of Boeings in that it's looking for, or something. I don't know, but it's not one for me. So the very next day, I got out of this trade. I'm not holding this grenade when it explodes. I got out of it for, I think, an overall profit in a day of 2. I bought them back one day later for 26 cents on the share. So hey, that's a profit, 3 cents per share in one day. I'm not going to bother working out the percentages for that, but it was a profit. So that's fine. It could have been a loss, but either way I would have jumped out. So thank you, American Airlines. You are going off the watch list, not to return. I hope I don't uncover a lot more of that when I start doing fundamental analysis on the other companies that I'm in and potentially loving at the moment, but we shall see. Right, so that was those. Next, UPST. So if you remember, I was assigned a UPST way up here at 56 when it blew through all of the support levels that I had on my thesis. And I'm currently now just selling 7-day covered calls on it to generate income. So it seems to have found a new home around about just under the 40 level. 40 is a lovely big round number that all prices seem to react to. So I think we're going to be stuck under 40 for a while. We missed on revenue. That's fine. I'm still making good return on the cover call side of the wheel while I wait for this to come back. So the previous cover call last week's I had at the 43 strike. It was obviously way out of the money on Friday, so that expired worthless, and I kept all the premium for that. And I immediately sold a new 7-day cover call at the 44 strike for 34 cents on the share, which 0.6-ish% in 7 days, or let's annualize that one up. That's 31% annualized. So I'll sell weekly covered calls at that level all day long. If UPS wants to keep here for the next year or two, that will do me nicely. That would just be a nice regular income, no problem there. Cost basis at the moment is 51.32, so we're not going to let these go for a long time yet. We'll see what happens. We'll just slowly chip it away at that cost basis every week, and I'm quite happy with that. As long as UPST doesn't decide to do anything crazy. As I've said before, this is my high volatility play, although it is a profitable company. We're coming into profit quite nicely each quarter, increasing from unprofitability. So I think there's legs in UPST, but either way, the volatility is nice that I can sell covered calls way above current, and I can remain quite nimble on that one if I need to. NVO, come on back. So we had a nice little rally last week. Since fell off again. I mean, NVO's always been reactive to the 20-day moving average all the way back. Since since June. So it had a little rally. It bumped its head on the 20-day moving average, and it's fallen off for the last couple of days. Friday and Thursday. Bit of a similar situation to UPST. I had a previous covered call at 51, which way out the money and expired worthless on Friday. Kept all of that premium. But strangely, volatility was huge for NVO this week, which meant I was able to get 50 cents on the share for a 54 strike covered call, which is above my cost basis, so that's nice, for 7 days, which, that's 0.9%, isn't it? That's nearly 1%, or 46% annualized, is that? On a return on capital of 5,600. That's huge for a week's trade. And if it does jump up, it's above my cost basis, fine with that. I'll easily be able to roll this up. So that was a brilliant trade. Again, like UPST, if NVO wants to keep this up for the next few months, I am more than happy with that. This is a great thing about the wheel. You earn on the cash secured side, puts, and then you get assigned and you earn on the covered call side. As long as you're picking companies that aren't going to go bankrupt, and you can manage your covered calls should there be a quick jump if you're selling them below your cost basis. That's why I really like this strategy. So that's MVO for the week. PayPal. I don't know what PayPal is doing. It's had a lovely home in this high 60s area for a long time, since last earnings in July. And even on a positive earnings here, we're just dropping like a stone. I don't know if I'm holding a falling knife here. PayPal's a great company. It's one I believe in. It's one I've been digging into the fundamentals of. and I'll keep doing so. They're spending an awful lot of capex expanding into various other markets, so someone's not liking that. But yeah, horrible down day on Friday, which of course meant that my last week's covered call that I had at a strike of 70, that expired for nothing, kept all that premium. And I've sold another one at the 67 level, which, yep, below my cost basis. But I kept that one standard deviation away when I sold it. Very low delta. So the chances of it getting back up here, the market believes, by next Friday are minimal. I am not letting this one go for a long while. I'm in this one for the long haul. So I only took a 23-cent on the share premium for that, which, that's another one's going to test the mental arithmetic. What's that? 0.3% return on investment over 7 days, considering I was assigned at 74. Yeah, so annualize that up, that's 16%. But for a conservative covered call, 16% return, yeah, I'm happy. I don't want to go closer to the money at the moment and get caught on the huge, massive upswing when it comes. We've got a dividend coming up, what's that? 14 cents, better than a kick in the face. So yeah, I'm happy to be a bit more conservative on that covered call. What are you doing, Trading View? Bring it back, there we go. So that's all of the trades I did last week. And of course we have a few other trades that are on. IBKR has decided to test my patience a wee bit as well. So that was caught in Thursday's downward move, just like everything else was. It blew through the 20 and the 50. And then Friday we tested the 100 and bounced back up. And at the moment I am 3 cents above my strike price. IBKR, I've done fundamental analysis in it. I'm a strong believer that this is undervalued at this level. Very profitable business. It's not carrying a huge amount of debt. So, even if I am assigned on this one, I will be keeping it and covered calling it to recovery. 8-cent dividend coming up. Might be worth it. But I fully expect this to recover on Monday and beyond. I mean, it's been, the last time we were below the 100-day moving average. I have to go right back to May. Of course, not that it can't happen, of course it can. But I just don't see any reason why it would do that. I took the 66 strike because it is an area of previous resistance, which becomes support. It was tested here at the end of October and it held. So it looks like we're testing it again now. Yeah, let's see what happens tomorrow. But I'm not overly fussed about IBKR right now. GameStop. My little meme that's not a meme anymore, in theory. Yeah, we're getting deeper in the money on this one. One and a bit dollars in the money here. This, what should have been, or what I thought would be a good, strong support level that had been tested many times since June. We finally broke it here. I don't know if that's indication of what the market's thinking this earnings is going to be. We're estimating 987 million previously, a bit higher than what was reported last time. Maybe somebody knows something I don't. But we'll see what happens. If I do end up getting, I can roll this right now, but I am reluctant to. I do not like to roll through earnings. And yeah, there's lots of schools of thought on that. Why not just keep rolling the puts forever? We're not that far in the money, so there is still good premium there to roll out another month. But, my thought is I'd rather take assignment, and on the off chance we get a huge pop in earnings, I've got the shares, I get some capital gains there too. It's happened before. Whereas if I have the put, then you're capped at just the premium you sold for. And if it doesn't pop, then you know what, fine, I've got the shares. I'm in no worse a position than I would be if I'd kept the cash secured put on a roll. So over many years, you're going to catch some big pops on earnings doing that. That'll pay for the ones you miss. So yeah, that's why I'm not rolling it. And if nothing happens on earnings, I can sell the shares and sell the put again. There'll be in intrinsic value to cover the unrealized loss between the realized loss. Sorry, for sell the shares between the shares and the strike price, and there'll be extrinsic to get a bit of profit on top of that. So either way, what are you doing, TradingView? Getting rid of my lines every so often. That's where we are right now. So we're probably going to get signed on this one, unless we have a nice little rally over the next week or so. But yeah, we'll see what happens. I mean, it was a bit of a non-day on Friday. Finished exactly where it started. So maybe that is the bottom. Corresponds with this low here back in April. So that might be hold our new support, 2070. Let's see what happens tomorrow. NU, I have not done anything with. They say it's a bad earnings. I mean, look at that. A surprise revenue of 18%. 649 million more than the market was expecting. And earnings, like, what is that? That's like 0.1% or something, is it? Less than what they thought. So yeah, I still think this is an absolute brilliant company. Already coming back up on a green day on Friday. I did look to see if I could get in around the 1450 area again, like I mentioned, but the premium just wasn't there. No, that tells you that no one is expecting this to drop much more. The volatility just wasn't there, even after a bad earnings, so it wasn't worth me getting in any new cash secure puts at this area, which is where I wanted to. So I'm just keeping my leap. I'm just keeping my leap going, and I'm aiming for the 20 area before December 27. So that leap is about $200 in profit at the moment if I sold it now. But no, I think NU has a lot of legs in it yet. So we're just going to hold that leap and keep watching out for opportunities to get some pullbacks and sell more cash secured puts. I mean, NU used to be a really volatile ticker to trade, and you used to get some awesome premiums on your puts. It's just not at the moment, which tells me that the market thinks it's going up, which is my thesis also. And HPE and Soxal are still where I was in previous, all my previous videos. I've not made any adjustments to those. It's just too much time, especially in Soxal. It's just too much time in these covered calls to really play with them at the moment. The extrinsic value is still huge. Though we have come down a good chunk. We did go back through the cost bases and then come back up again on Friday. So, this is a 3 times leveraged ETF. It's going to fire all over the place with news. So, yep, we're not intending to do anything with that. We'll just keep it where it is. So, where are we? We're about halfway through November at the moment. Pretty much. We're almost on target. As you know, I aim for 2% on the portfolio every month, which is a 24% return annually. And looking back through the records for November right now, we are 0.09%. So pretty much 1% halfway through the month. And having jumped out of the American Airlines trade, I've got plenty of powder to redeploy for next week. And it is always slower in November. It's the middle of earnings season. All of the companies I usually look at trading are declaring earnings in or around this period, which means I can't trade them because I don't trade over earnings announcements. It's just gambling in my humble opinion. So I'm okay in November if I don't actually hit the full 2%, but we're on target at the moment. We'll wait to see what comes up next week. Might be something we can play with. Well, that's it for week 45. I'll be back next Sunday night for week 46 recap. We'll see what happened. Okay, stay healthy, stay happy. Above all, stay profitable. I'll catch you next week.